Hello and welcome to another session of the My Solo 401k Financial Daily Webinar Series. We're excited to discuss Big Beautiful Bill. Now is the time to open a Mega Backdoor Roth Solo 401k. As always, the presentation is being provided for educational purposes only and should not be construed as tax, legal, or investment advice, nor is a solicitation. When making an investment decision, please consult with your tax attorney and financial professional. If you have questions or topics you want to discuss, whether on this topic or even off-topic issues, please don't hesitate to chat those over. Please chat those over now so we can make sure we capture them. But we're going to dive right in again to our discussion, which is we're going to continue the conversation around the Big Beautiful Bill. A lot of conversation out there about that. Of course, we want to focus on things that matter to our solo 401k community, which one of the top things is the Mega Backdoor Roth. So let's first lay the foundation, and then we'll dive into the more to the meat of the conversation. So the Big Beautiful Bill was enacted. It's really law now, not just a bill, on July 4th, 2025. One of the big takeaways is that it did not ban the Mega Backdoor Roth Solo 401k. So there was some confusion out there about that. We clarified that earlier this week. The Big Beautiful Bill does not ban the Mega Backdoor Roth Solo 401k, which is great news. There was confusion around, I believe, legislation from a prior administration, which had the same acronym, BBB, which did include a proposal to ban the Mega Backdoor Roth at one point in the legislative process, never was enacted. This time around with this administration, it was never even included in any of the versions that were being proposed, which is great for our community because that's a great tool for the self-employed community. The solo 401k community is the ability to make those Mega Backdoor Roth contributions. So as always, we are vigilant around the Mega Backdoor Roth Solo 401k and laws or rules that might change. And we want to communicate that to our community right away. The expectation is that there's not going to be any changes for the duration of this administration. You never know, of course. We'll keep our ears open, our eyes vigilant, and we'll keep the community posted. But it's great news. So that's one takeaway, that as far as why now might be the time to open a Mega Backdoor Roth Solo 401k. But we're also going to focus on some other aspects of the bill, which could also want one to start making those Mega Backdoor Roth Solo 401k contributions, which is around the tax cuts. So there's a lot of news reports about how the Big Beautiful Bill made the Trump era tax cuts permanent. So what does that mean when they say it's permanent? Because really in reality, it's not technically ever permanent, right? What it means in the context of legislation is that there's no sunset provision. Sometimes when legislation is passed, there will be a sunset provision, like with the Trump era tax cuts, the previous administration's tax cuts, which is why new legislation had to be passed to extend those tax cuts. And that's what the Big Beautiful Bill did. So it made the tax cuts permanent in that it continued the same relatively lower tax rates relative to the prior, before the Trump era tax cuts were first enacted back under the prior administration. It's keeping them the same, and it's removing the sunset. So that's why they say that it's permanent. But of course, as I mentioned, nothing's permanent, right? New administration can come in, new Congress that could still change the rates in the future. So we always want to be vigilant around that. So why does this matter for Roth planning? Well, lower tax rates are now locked in. Again, not forever, but at least there's no sunset provision. So the conventional wisdom is that when you make essentially Roth contributions, you're making those on an after-tax basis. So you might be first maximizing your pre-tax contributions and then making after-tax or Roth contributions. So you might be hedging your bets, still capturing some type of pre-tax benefit now, at the same time putting money into a Roth account on an after-tax basis. or some will go all in and just do all Roth and Mega Backdoor Roth. And there is some thinking out there, right, that with these lower tax rates, that it might make sense to make those Roth contributions to maximize the Roth now. Now, of course, we're not giving tax advice. Your situation, maybe, it's your situation specific to you. So you'll always want to speak to your tax and financial advisors around that. But just to share some of the observations, which is that if you're paying a tax at a lower rate, effectively by making those contributions on an after-tax basis, it may make sense to maximize your Roth contribution, especially now that those lower tax rates are locked in, at least for the foreseeable future. And there's really no rush, at least for the foreseeable future, because again, the sunset was removed. Another thing that makes it relevant, especially specifically at this time, is that there still may be an opportunity to make 2024 Mega Backdoor Roth contributions. So why do we say that? Well, if you filed an extension for your 2024 self-employed business tax return, you could still make contributions, Mega Backdoor Roth contributions specifically for 2024 by your extended tax return deadline. So let's give an example to illustrate. Let's assume that your self-employed business for 2024 was taxed as a sole proprietor. So you were reporting your self-employment income, or you will report your earned self-employment income on your 2024 1040. So if you filed an extension for your 2024 1040, which would give you until October 15th to file that 1040, you could still open up a solo 401k and make voluntary after-tax contributions for 2024, which is how you make Mega Backdoor Roth contributions, all the way up until October 15th. Or if you already have a solo 401k plan, but it's a vanilla plan that doesn't allow for the Mega Backdoor Roth contributions, and you filed a 2024 self-employed business tax return extension, like the 1040, the case of a sole prop, you could upgrade your plan to our plan and make Mega Backdoor Roth contributions for 2024, voluntary after-tax contributions for 2024, all the way up until October 15th. So now that we've got clarity on the tax rates, you might want, and if you filed an extension and you haven't already maxed out your contributions, you've got the self-employment income to justify it, there might be an opportunity there to make 2024 Mega Backdoor Roth contributions. So let's take a step back and explain the Mega Backdoor Roth, just to make sure we're level setting. So Mega Backdoor Roth is a marketing term. Really what it is a solo 401k plan that allows for voluntary after-tax contributions. So not just pre-tax, not just Roth, but a third type, voluntary after-tax. That's the first piece. The second piece is the plan, meaning the documents need to allow for transfer of those voluntary after-tax solo 401k funds, either to a Roth solo 401k, so in plan, they stay inside the plan, or out of the plan to a Roth IRA. So a plan like ours, in other words. So if you set up a new plan, it's going to automatically come with these features. If you set up a new plan with us, it's going to automatically come with these features. Or if you upgrade your basic plan to our plan, now it'll have these features where you can make these Mega Backdoor Roth contributions. So sometimes people come with the background of making backdoor Roth IRA contributions. So that applies to a Roth IRA. And it applies in a situation when someone is not able to make Roth IRA contributions because their income is too high, right? So if your income is above a certain amount, you're not eligible to make Roth IRA contributions, but you might be able to make backdoor Roth IRA contributions, where you make non-deductible IRA contributions and transfer those over to a Roth IRA. So we bring up the income limits because sometimes people have that background. That's their baseline understanding. And then they're translating that understanding to the Mega Backdoor Roth Solo 401k. So with the Mega Backdoor Roth Solo 401k, though, there are no income limits. Regardless of how much money you make through your self-employed business, you can make voluntary after-tax contributions if you have a plan like ours that allows it. So that's great, right? There's no income limits. The contribution limits are also much higher than a Roth, certainly much higher than a Roth IRA. It's 10x. So for example, for 2025, the voluntary after-tax solo 401k contribution limit is $70,000. So as long as you have the self-employment income to justify it and you haven't made other contributions to the solo 401k, you can contribute 100% of your self-employment compensation up to $70,000 as a Mega Backdoor Roth Solo 401k contribution. It's also much higher than your standard employee or employer contribution limits, right? The employee contribution limit for 2025 is $23,500, much less than $70,000, right? The employer contribution limit theoretically could go up to $70,000, but you'd have to have a lot of income to justify it because the employer contribution limit is a percentage of your self-employment compensation, whereas the voluntary after-tax contribution limit is 100% of your self-employment compensation, dollar for dollar. So even with just $70,000 in self-employment compensation, an individual is going to be able to contribute the full $70,000 as a voluntary after-tax and then transfer it over either to a Roth Solo 401k or a Roth IRA. And I see we've got some questions. Thank you so much. We're going to just get through a couple more slides and then we'll turn to the questions. If you're finding this to be helpful, please like this video. Please share it with others that might find it to be helpful. It'll just help us get the word out. We really appreciate that, whether you're watching on Instagram or X or LinkedIn or YouTube. Also, if you subscribe, we do go live every day and you'll get notifications of when we go live. We'd like to answer questions. If you have questions, we'd like to bring topics that are of interest like we are. So please please subscribe. We appreciate the engagement. So those after-tax contribution limits, right? So if you filed an extension for your 2024 self-employed business tax return, you could still set up a plan and make those after-tax contributions for 2024 by the extended deadline. The limit there is $69,000. Of course, there's plenty of time for 2025. The limit went up to $70,000. And again, you can contribute dollar for dollar based on your self-employment income. There's still time to open up the accounts, make those contributions for 2024. To get started, just go to our website, mysolo401k.net, click on open account. It's just a 1-minute application. Just to be transparent, we charge $650. Our pricing is right there on our website in black and white. That's the initial fee plus the first year fee starting 12 months later. So say next July, if you signed up here in July 2025, so July 2026, our $125 flat annual fee would apply. It's going to cover everything for the second year, all the ongoing compliance support, whether you need a 1099-R because you're making $5,500 or because you're making Mega Backdoor Roth contributions, whether you need a $5,500 EZ because the value is greater than $250,000. All that ongoing compliance support is included as an optional free service, so no additional charge. Prepare the documents to establish the plan within the same business day when you sign up. Then we help you open up accounts at the bank or brokerage of choice. Could be Fidelity, could be Schwab, could be a bank or a credit union. So it's important to work with a provider that offers a plan that allows the Mega Backdoor Roth or Roth conversions, right? A lot of folks want to do in-plan Roth conversions. Totally flexible on where the accounts are set up. We're totally neutral. We're also hands-on, though, at the same time in helping you open up those accounts, or if you want to roll over money from, say, a pre-existing retirement account, the compliance support, like I mentioned, there's no AUM fees. So just to educate you on what makes our plan different. And we also invite you to our community. We have a vibrant community of over 30,000 members. It's totally free to join. All are welcome. We have forums. We have a library of videos and webinars. So please feel free to join. We invite you at mysolo401k.net/my-community. Okay, wonderful. So I want to know how I can, thank you so much for your business. Yes, you can take a loan. Absolutely. You could borrow up to 50% of the balance, not to exceed $50,000. Now you would take it either from the pre-tax or the Roth. So if you're making after-tax contributions, they would be first transferred from the after-tax to the Roth. Then once the money's in the Roth account, you can either borrow from the Roth, borrow from the pre-tax. You can borrow from both. If you want to borrow from both, it would be documented as two separate loans. So you're borrowing from the pre-tax, you're paying back to the pre-tax. You're borrowing from the Roth, you're paying back to the Roth. The loans are limited to 50% of the balance, not to exceed $50,000. So use the entire balance of the plan to figure out what your balance is. Then you could just take the loan from one account. So if your total balance across all accounts is $100,000, You could take a $50,000 loan just from one account, assuming you have at least $50,000 in just that one account. Then you pay it back to that account. If you take two loans, still limited to a total of $50,000 between both loans, documented as separate loans, paid back to the separate accounts. If you email us at support@mysolo401k.net, then we can give you the next steps, like when you're ready to take a loan. Because then we have an online questionnaire where you can request that loan. Then we prepare the documents to document the loan as an optional free service, and we do that within 1 business day. But just to be clear on the restrictions, right? It's limited to 50% of the balance, not to exceed $50,000. It needs to be paid back in either monthly or quarterly payments, equal payments of principal and interest. The interest is prime plus 1%. And those payments are spread over a 5-year term. Yes, you can do in-plan conversions. Could go from after-tax to Roth. Could go from pre-tax to Roth. In either case, it needs to be documented on a 1099-R. If you go to mysolo401k.net/forms, we have forms to capture the information needed to prepare the 1099-R, which we do that as an optional free service for our customers. Of course, if you're going pre-tax to Roth, that's going to be taxable. Please chat over your questions not related to the topic. Well, you can technically borrow from the after tax, but it doesn't make sense to, because the interest is going to be taxable when you ultimately transfer it out of the after tax. So most people just make the after tax contribution, then they transfer to the Roth, either to take a loan or to invest. Because gains inside the after tax are taxable. So when you're paying that interest back, you're paying it back to your 401k. So that's a gain. Okay, next question. Thank you for those wonderful questions, Sherry. We appreciate that. We appreciate the engagement. My wife and I own multiple rental properties in a 50-50 partnership, Series LLC. Our sons are the only employees working part-time, less than $500 each in the rentals. They receive W-2 from the LLC. I'm no longer a W-2, started as an Uber driver. So for 2025, I expect to file some small income in the Schedule C. Would I qualify to open up a solo 401k? The plan is to roll over my 401k from the previous employer into the solo 401k and create a rental portfolio in it. So as long as you're self-employed, which the fact that you file a Schedule C demonstrates that you're self-employed, with no non-owner, non-spouse, full-time W-2 employees. So your children who are less than 21 years of age wouldn't prevent you, but I see that you have one. So as long as that child is who's 21 or older, is either not working as a W-2 for any business owned by you or a spouse, if any, or if that individual is working as a W-2, as long as they're working less than 500 hours, that's not going to prevent you from being able to set up a solo 401k from a separate business. As long as you don't have any other businesses owned by you or a spouse that have non-owner, non-spouse, full-time W-2 employees, you can set up a solo 401k. You could roll over money from a former employer plan. Then you can invest that money once it's in the solo 401k into real estate rental properties, provided that you do it as a passive investment. So you can't work on the property. You can't use it for personal use. The property is purchased from an unrelated person and not as part of some step transaction, right? You can't sell property to an unrelated person and then have that person sell it to your solo 401k. The property would be titled in the name of the solo 401k. All the income and expenses related to the property would flow in and out of the solo 401k. If you're using financing, it's got to be non-recourse financing. So it's not financing that you are guaranteeing personally. So the borrower is going to be your 401k. So there are specialty lenders that'll lend to people's retirement accounts to invest in real estate. They provide these, what they call non-recourse financing. Because of the nature of the non-recourse financing, specifically that you can't guarantee it, the only recourse is the property itself. It's usually priced quite differently. For example, they often want 50% down. But yes, you could use non-recourse financing together with money in your solo 401k to buy real estate from an unrelated person. The payments on that non-recourse financing would also have to be paid by the solo 401k. So you'd want to be confident that you have enough money in the plan to cover not only the payments, but the ongoing expenses, the taxes, etc., related to the investment. Hopefully that helps. Those are great questions. We do appreciate the engagement. Like I mentioned, if you are finding this to be helpful, please share with others that might find it to be helpful. Helps us to get the word out. Please subscribe so you get notifications of when we go live. Would I still be able to manage the properties as long as I'm not perform physical work? Well, it does depend on the facts and circumstances. It would be acceptable, for example, to receive the checks and as the trustee of the plan and deposit into the Solo 401k account, to select who the tenants are, things of that nature, to engage the service providers, right? Like the plumber, if the toilet breaks. If it's a short-term rental, then that may constitute a lot more work, which would go above and beyond passive investing. Number one, where most in that situation would then hire a property manager, a third-party property manager. The other consideration when it comes to short-term rental is that might be business income, right? The IRS sometimes views that short-term rental as business income. If you have business income inside your 401k, that doesn't necessarily mean that it's prohibited, but it may be subject to a special tax called unrelated business income tax, which is going to cut down on the returns. In other words, your Solo 401k is going to have to give back some of those returns in the form of paying taxes, that unrelated business income tax. Hopefully that helps. All right. Well, thank you so much for the great engagement. Until next time, thank you. Oh, here we got one more. Yes, it's possible to have the Solo 401k invest in a series LLC where the sole member of the LLC is the Solo 401k. The Solo 401k owner acts as the manager. There's a separate bank account opened up for the LLC under a separate EIN number for this LLC. The operating agreement documents that the LLC is owned by the Solo 401k. You're still going to be limited to all the same investing rules that we already discussed. We'll see if another question comes in. Okay, wonderful. Thank you so much. Take care, everyone. Bye-bye.